What's up, everybody? This is Jay Wicker with Real Estate Aholics, and as you guys see, man, we got the big boys on the team today, man. Real Estate Investors Club here. You know, from the top, top left. Tell us what's your name, where you logging in from, and what you do. John, it's on you,
It's
bro.
me. This is I was on mute. My bad. My headset
No,
was
it's all
on
good.
mute.
It's all good, bro.
Uh, no, I go by Johnny Leverage, Jonathan Smith. I am originally from Dayton, Ohio, calling in from Dallas, Texas. I am a financial strategist, a trust consultant, insurance broker. I basically help people not have to worry about those tough money problems, so that way you can focus on what it is you want to do to grow, whatever that passion is.
Man, we need you, bro. You know, that's off the chain right there. All right.
Yes,
All
sir.
right, we go to you, Jay. You
Jason Sims, New Way Investment Group, real estate investor, mentor, coach, out of Dallas, Texas, and here to talk about everything that's got to do with real estate. And my boy up there going to talk about saving money and keeping the tax man out your life, and see what we can get together with on tonight, yo.
Yes, sir. Yes, sir. On you, Lenny. Oh, you got the mute on, Lenny.
Bam. That's
There you go.
good.
Yes, sir.
Oh, mic check, mic check. It's going down.
One,
Look,
two,
guys.
1, 2.
What's up? What's up, guys? My name's Lenny, man. Checking in. I'm in Springfield, Missouri right now. Originally from Cleveland, Ohio. Wholesaler, buy and hold investor. Catch me over on wholesaling with Lenny. That's what we do, y'all. We teach people how to, get money by real estate. Same thing we do here, basically. That's
Yes,
just me.
sir. But like you said, wholesaling with Lenny podcast, man. Make sure you guys check him out, man. Got he dropping number dimes over there on that end, man. I got to get back over there.
Yeah. Sure.
Yes,
So
sir.
you definitely gonna get back over there.
Yeah, I got to definitely do it, bro. I got to definitely do it. You got to get everybody else over there too, man. So they see how it's really going down over
You
Oh yeah.
already know.
there.
Oh
Yeah.
yeah.
Jay up, Jason up.
Oh
Yes,
yeah.
sir. Yes, sir. Yes, sir. hey, salute to everybody, man, that's tuning in, man. This is gonna be a good one here, guys. So, a lot of times we talk about some different things, man, that we just chop it up a little bit. Then sometimes we just talk about some real estate, some little icing on the cake type. But this right here is the meat and potatoes, guys. So you got to get your knife, you got to get your fork, you got to tear into that thing, right, and really chew this thing up, right. So today we're talking about, well, right now we're gonna talk about this right here, guys. So the question is, what is a trust? So the definition of a trust, right? So let me give you Webster, right? A trust is a fiduciary arrangement that allows a third party or a trustee to hold assets on behalf of a beneficiary, or what is it? What's that? Beneficiary, right? Or beneficiaries, right? So
Yeah.
that's basically what a trust is. So what are you guys' definition of a trust? Do you guys have a different definition of a trust?
Yeah, it's
Uh,
an instrument, right? It's
Yeah.
like playing an instrument. Okay, so that's the same thing we call a document, right? We say a purchase and sale agreement. That's an instrument or a tool that we use in our business to be able to transfer property to another person. But I like to look at it and say, okay, well, it's an instrument to have control over property and money, right? And it's a safeguard. So an instrument and a safeguard, not just for you, for the property that's in it, and then also for, like you said, the beneficiary or the beneficiaries of that trust. And it also allows you to be able to do a whole lot more. I mean, the list goes on and on and on of the things that you can actually do. So it's a powerful instrument to be able to use in real estate and any other business that you may have, and also be able to set um, your family up
Yeah.
for the generations that actually come, for sure.
Yeah.
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 Yeah,
So
me myself, I consider trust the probate killer. Okay, I consider a trust the probate killer. Okay, because when I go, I ain't got time for nobody to be waiting on no judges and magistrates to separate my assets and things of that nature. So that's what I view. Trust is, like Jake say, safety net, which you can do multiple things with. But I definitely love to dig into it You know what I'm saying? A little more, man. So, that's definitely why I'm here. You already know.
Yeah,
Yeah.
yeah. So
Yeah.
there are different types of trust. No, go ahead, Leverage.
Yeah. I was just gonna say when I talk to my clients,
You got a
I
question,
just
Leverage? You
to
got a comment?
no, I would just can you hear me?
Yes, sir.
All right. No, I would just gonna say usually the simplest thing I tell my clients when I talk to them, just it's a legal entity that's made through contract law, exists to three parties, and it can be used to transfer or manage property or assets. Um, Crazy thing is that it's sometimes that some people run companies out of trust.
Contract law.
Um,
That's
a
the
lot
three
of
parties.
the
And it can be
um some of the loan companies that you'll see out here, the title loan, these different companies that are doing whatever types of loans, their entity structure and a lot of times is that of a trust, um, just for those tax benefits and things. So there's a trust itself is, I like to think of it in the same way people look at like an LLC, or you look at an S corp or a C corp, because you obviously get these entities to limit your liability, uh, to limit your the tax liability especially, um, and to maintain a certain level of what was the JD Rockefeller, own nothing, control everything.
Mm.
Uh,
Mm-hmm.
Yep, yep,
so
yep.
yeah, that's
We,
just my
we
little 2 cents.
yeah we posed a question a little while back though. Would you rather own real estate or control it?
I'm still
Right.
on the control.
I'm still under control, man. And this is
Yeah,
the way to do that, man. And so, I mean, for the average person that's looking on this, though, why would you rather control it and own it than own it, though? Right? I thought everybody was paying their mortgage so they can own it. So
the bank.
let's understand that, right?
I look at it like this: if life was Monopoly, and we all had the option to be the bank, I'm pretty sure everybody that's played Monopoly on here be like, oh yeah, I'll be the bank. Yeah, I'll be the bank. Cool. Because that's gonna be a good position. That's gonna
Right.
guarantee
Right.
some wins.
Period.
So in real life, look at the situation where you have the real estate investor who may go to the bank and get a refi, and now this bank may have the title, they have the deed, whatever the case is, they got ownership. They don't have to worry about the tenant. They got to worry about, whether the pest problem, the grass, the HOA. They ain't got to worry about none of that. They asset is sitting either in a digital file or a file cabinet in the form of
Mhm.
that deed, that promissory note. So, and at the end of the day, if they lose out and somebody defaults on this loan, their repercussion is ownership.
Mhm.
Their repercussion is, oh well, now we gotta keep in
Yeah,
mind, and now we gotta own it and sell it and go through the hassle of trying to you know
yeah. That's a good point too.
yeah,
The default. They default is ownership
yeah.
now, right? Oh man, I gotta own this
Now
property.
I gotta
You know,
own it, boy.
that
Are
is
you
funny, man.
serious?
Wow,
Well,
man.
let's talk, let me expel on that for just a little bit too, because we're
Yeah.
talking about, oh man, I gotta own it, right? Here's the thing: the reason why is because the ownership part is what becomes the liability.
Mhm.
That's right. Fact.
Yep.
Okay, that's why they don't want to own it,
Yeah.
because it becomes the liability. Those of us who buy houses, right? I'm talking about the ones that want to live in them. We think that we're going to buy this and own this, but not knowing that it's a liability.
Yeah,
Right.
man.
Exactly.
Okay,
Yeah,
that's
man.
why as an investors we always talk about we want to control the asset, we want to control the real estate, is because we don't want the liability. That also goes right back to what we're talking about, which is the trust.
Yes,
We
sir.
want to be the beneficiary of the trust so that we can avoid the liability.
Man.
I may expound on that. So I actually don't even preach, depending on the situation. I say, really is being the trustee. And that's what something because it goes into the money, right? The taxation of the money. If I'm receiving money from interest income from a loan, that's a lot more advantageous than rental income or the capital gains I'm gonna have to worry about from selling this.
Mhm.
Now we get to talking about, I got other implications. I'm still gonna get paid, but now I got other tax implications on the manner and the form that I'm getting paid now. So it's always own nothing, control everything.
Yeah.
Get it
Wow.
out your name.
Man, listen, this is a total mind flip for a lot of people, bro. It has to be. You know what I'm saying? 'Cause I'm in the mortgage. When I was in the mortgage game before I got into the investing part of it, I would have been like, y'all crazy.
Y'all know,
You know?
hey, I just put that quote on my bio, right?
No.
All right now, I just did.
Oh, you did?
Own nothing but control
Control
everything. I
everything.
literally just put that on my bio, bro.
Yeah.
No.
Fact.
So there are many different types of trust, right? So one of the trusts is the trust that we're talking about right now is called what?
Well, you could
Is
just
that the
change
right
that
one?
first. You could change that first word because I want it to be irrevocable.
So
That's what
I got the
that's what I
wrong
was
one? Okay, no,
getting at.
here we go
We
right
don't
here. I
want to
get the
live
wrong
in
one.
trust. We don't
Okay,
want to
you
live
got
in
the wrong
trust.
one. Okay, so
We
I
want
got it mixed up there. Okay, so
Yeah,
let me put it in here right there.
we want an irrevocable
Yeah,
trust. We
we
want
want
it spendthrift.
Okay,
irrevocable.
We
so
want it complex. We want it discretionary. We want it renewable. We want it domestic. There's some things that some different. Remember, I said contract law,
Right.
right?
The
So
reading of it.
yeah, you want it worded in a way
Mm,
that's beneficial for you. So you need certain provisions inside of it. So
mm,
the last thing you want, I'm telling everybody if you're listening, if you got a living trust, all that does
Get
is just
rid of it.
bypass probate. You don't get any real assets. And even some cases, you look, you don't need it. That's a
Nope.
waste of time. It's you don't get what the real benefits.
okay, so let's break that down to you. So
No living
irrevocable,
trust.
no
That's
living trust,
irrevocable. No, no living.
no living. Okay, so I
None.
had that wrong there. Okay,
Yeah.
now understand this too. So I don't know a whole lot about trust neither though. So I'm learning as I go too. So it's just a irrevocable trust. That's it.
That's it.
That's it. Okay. So what's the difference? Though, break that down to us again. So break that down to us again.
Well,
For
let's just talk.
me and the people in
I
the
mean,
back.
my guy up here is the he's the expert on this. Okay, we hire people like him
Yeah.
to do this for us because he needs to be able to understand and put the provisions in there that we want.
fact.
But he he helps us understand. Okay, that word itself by itself irrevocable.
I'm writing this
Okay,
down, by the way.
we do not
Yeah.
want anybody to be able to come and go before a judge and revoke that trust,
Mm.
okay, to get to the assets that's in that trust.
Yes, sir.
Mm.
Okay, that's why we're using that word irrevocable.
So
Okay,
Jay,
It can't be changed.
so
Yeah.
Jason,
Irrevocable.
what would cause someone to be able, like, give me an example of what would be a reason why someone could be able to go to a judge, have a legal ground to
that
revoke
renter,
that trust.
that property that they're living in that's in that trust, if they bring lawsuit against the owner of that property and that's the trust, okay, and they go before a judge, well now that judge can overturn that trust to get to the
The act.
person, the beneficiary that's inside of that trust. Now they're after your assets,
So
just like my man was saying
Mm.
about a corporation. We always talk about the corporate veil and
yeah.
piercing the corporate veil.
Right.
Okay, this is the same idea, it's just in a trust.
Yeah. So in most cases, like when we're looking at like the tax implications of it, we say the big key difference is whether it's a grantor trust or a non-grantor trust. And what that means is whether you're the person that creates the trust or whether you're not the person that creates the trust. Um, and that's truly what goes into separating it, because with the IRS, if in most cases if you have property inside this trust, and let's just say you're still making some money, you're still trying to do some things and you're trying to get some tax benefits or whatnot, they may consider it an alter ego trust. They are alter ego status, meaning that
Hmm.
they'll say that, all right, you're trying to evade taxes. They're real specific on how you're going to go about um, avoiding these taxes. And even for me, I work with a company called
We're
Nexus
paying
International.
less taxes, not avoided though.
Yeah,
To
no, no,
pay
no,
less taxes.
no. Avoid
Yeah,
tax
avoid.
avoidance,
Oh,
tax
Yeah.
okay.
avoidance,
They're
and
going
it's
to
on the
use that
IRS.
word.
Yeah,
They're going to use that legal term
Yeah.
to do just what we're talking about. We don't want them to do.
yeah. You want to avoid taxes. You don't want to evade. Evasion
Okay.
is that's the L. That's
Gotcha.
you. That's you
Gotcha.
end up like Wesley Snipes. He was
Mm.
evading.
Boy.
Donald Trump and Amazon and Elon Musk and all these other people that you hear complaints about, they avoid taxes. They do not create a taxable event. A lot of cases, I can't speak for all of them, but in a lot of cases, they utilize these trust instruments.
Yeah.
They have it set up properly to where, you know, they have the right provisions. In some cases, the trust is the limited partner to their LLC. Some cases, like I mentioned with the you know the lenders, and depending on what space it is, some of these institutions, these financial institutions, are trusts themselves. Because you got to think about it. If a trust itself is property for a beneficiary, a beneficiary that's intended for a beneficiary being held by a third party, well, what's your money inside that bank account? You know, in a lot of situations, they're holding assets for you.
Yep.
So there's so many different ways. You guys are all in real estate, so you know, escrow. Um, Perfect example of you know, money, assets being held for the benefit of somebody else, but you know, by a third party. So it's just separating it. Like you said, that corporate veil aspect, being able to create layers between yourself and your operations, and making sure that those layers are all compliant with case law, with tax law, with the tax code, because that's where they'll get you.
Yeah. So keep in mind, everybody, we're not CPAs, we're not lawyers, anything like this. So this is all entertainment purposes only. So take the information for, you know, for, I guess, how you say it. Take this information how you want to, but it's entertainment purposes only. So, but listen, man, this is pretty dope, man. I think a lot of us, man, don't know nothing about this, right? And as I was doing my research on this, there was a lot of stuff I was like, man, I just kept saying it the whole time and think about all the different trusts that there are. Like they even have one for, let's say if you have a kid that's handicapped or whatever the case is, right? And you want to leave that person some money, right? It's a trust that you put the money into a trust to make sure that person's taken care of. Or if you want to leave, it's like so many different ones, man. It's like,
I
wow.
just want to point
That's
out,
just based on the wording.
that's just the wording. That's
That's
just
just
the
the
wording.
wording.
It's either going to be irrevocable or revocable. And the one thing I wanted to say before we got off on the irrevocable aspect was that the big thing for that provision is that it offers the tax advantages and the legal protection from the liability, if it's properly structured and executed. Irrevocable trusts, they don't pay taxes on capitalization and endowments, and they're generally beyond the reach of creditors and judgments. So if you want asset protection, your trust needs to be irrevocable, and that other provision I mentioned earlier, non-grantor.
Okay, I got two questions, right? This is for me, right? So if you have a property, right, you have a mortgage on it,
hmm
can you put it in the trust?
You can sell it to the trust. That's what the idea, the strategy is you sell it to the trust, and you
Sell the
sell it,
house, sell the car, put it all in there.
you sell everything to the trust using a notarized bill of sale.
So if somebody was to look you up to see if you own something, they wouldn't even be able to tell based on
Yeah,
that, right?
Right.
that's literally what it is. You don't, if I don't, it's not,
That's,
there's three aspects to ownership. There is equitable interest, meaning if I bought it or if I sold it, I get the money for it, I get the funds. There's beneficial interest. So if it's a car, I get to drive it. If it's a house, I get to live in it or whatever. And then there's title. So if you have all three of those, you're subject to judgment. You're subject to lawsuits. You're a target. But
yeah,
in the same case, somebody can't take from you what doesn't technically belong to you.
You just control it.
you just control.
You don't
I'm the
own it.
trustee. The
Wow.
trustee
Yeah,
manages the
that's it.
trust. The trustee manages the trust for the sake of the beneficiary. So it'd be your kids, it'd be whatever. And
Cold
yeah,
game.
that's that.
Cold game.
It's a cold.
Cold game. So how many things can you put in one trust? Or you
There's
put
no
one in
limit.
How
this
much?
trust,
How
you put
much?
anything you want to put in there.
Yeah,
There's
let
no
me let
limit.
me put this in perspective. You know that big castle that's over in England that the Queen of England lives in. That's
Yeah.
in that. I think I'm pretty sure that castle is inside the Windsor Trust, which has been around since like the 1500s. So if
Mhm.
that castle can stay in this in that trust, which only God know, you guys have a better idea of appraising real estate than I do. But try to put a numerical value on that castle over there in England right now,
Good
and that's
luck. Yeah.
inside of a trust.
This is where the phrase "old money" comes from.
Yeah, man.
It's
Yeah.
J.E.
been passed
Rockefeller.
on. It's been passed on and passed on and passed on. Nobody understands it. Okay, nobody understands. This is, I think I heard when I popped on before that this has been going on. The United States is one of the youngest countries that there is. So all the other stuff, okay, even our prime rate that we get doesn't come. It says it comes from our U.S. government, but that comes from overseas. That's not our rate. That's what we're being charged for the money, and then that's why Prime Plus is what we get charged.
Our court system, think about it like this. When this country started, who is it started by? By a bunch of English dudes who just left England. Like in the most basic sense, if we had to just paraphrase, it was founded. This country was founded by a bunch of English business owners and slave owners, and and they just relocated over here and they set up shop. And of course, if you're gonna set up shop coming from wherever you come from, you most likely just gonna bring the same system and probably make a few tweaks here and there. But then again, we don't know how deep individually that the finances on between the UK and America, we don't know how deep that runs, so how much the influence they may have had. So there's so many things but this is nothing but a carbon copy of European common law.
That's it.
Wow. Woo! That kind of just blew my mind real quick, man. It's a lot of things we can actually do with some trust, man. And I would say, man, do some research on it. There's tons of videos that I've seen, like on YouTube. You can look up, man. It kind of gets you.
Be careful with those videos, really be careful with that, because, and like I said, that's why I mentioned it before I said anything, that my guy up here, if you need it done, get with him, because he is the person that does it. You've got to get with somebody. We talked about this yesterday, right, on the business podcast, a trusted advisor. I'm naming him as a trusted advisor because this is what he does and this is what he understands. Because we can all go get, we can go to, what is it, Rocket Lawyer or whatever it is, and we can buy these documents and forms and we'll fill them out. But if we don't understand the wording in them and we don't understand contract law, you could be setting yourself up for failure.
And here's what I wanna emphasize on, and I do want to make myself available because I work with attorneys. I work with attorneys who've been creating these trust documents for decades. I work with CPAs and trust accountants and IRS enrolled agents who know the tax code. They all know case law. So once again, if you want some information, I can definitely send a PDF. It's an executive summary of the type of trust that I'm speaking on, and it explains the provisions that I mentioned. It explains the tax codes that apply and that show where, okay, you're not subject to capital gains tax here, and this is, like I said, I myself am not an attorney. I am I'm a consultant with the company, so I'm learning directly from these individuals. I'm able to sit inside and gather this information for the benefit of bringing in more business. So I always want to tell people, if you do not, if you feel comfortable writing the trust yourself, hopefully you know how to interpret Black's Law Dictionary, as well as several other legal sources that may not be readily available to us all. But get an attorney. Definitely, like, if you're gonna have it written, you want an attorney, because you're talking about something that has to hold up in court. You're talking about that if you're trying to defer or not make yourself subject to lawsuits and things of that nature.
Make sure it's done right.
It has to be, because
get it done.
it's gonna, and sometimes it doesn't make sense to do it until you have something worth taking.
Right.
That's the other thing, is being realistic.
Yeah. And see, my guy, he works with attorneys, right? And I mean, if you get a consultation with him, and I'm actually telling everybody too, because I know how powerful trusts are. But if you get a consultation with him, I'm sure he's going to explain to you certain ways that you should actually use it. And then, of course, also you got to teach your other beneficiaries later on how to use it as well. Okay. One of the other things too is that he works with the attorneys. He's got the IRS enrolled agents and things that's in his back office that he uses. One of the things you can also do with a trust is that if the attorney actually processes and set up that trust and they've got it, then whoever tries to come after would have to subpoena to find out who's in it, because it's protected under attorney-client privilege.
I mean, and
Another layer. That's another layer, right?
Right.
it's so many layers to it.
That's
And
wild.
one of the other things I want to point out is um the accountant aspect of it, because you have to look at, all right, on a surface level we're like, oh, tax implication, oh, cool, but here's the thing: the IRS still needs you to file paperwork. They still need, yeah, you can do this and you can abide by these set of tax codes, but do you know how to file whatever the scheduled forms at, because it's not the same forms. We're not talking about the same W-2, 1099, K-1, whatever situation
1040
that you're.
easy.
Yeah, we're I think we're in a whole different ballpark, and most CPAs don't know this stuff.
No.
That's why I credit, the company that I work, Nexus International. They're focused out of Dallas, Texas, out of Bedford. Awesome individuals, but like I said, you need somebody who actually knows what's going on. They have what's called a PLRs, private letter rulings, from the IRS, basically showing that the people who had been audited, right, that this is the judgment from the IRS saying that, okay, well, upon our research we found that you were compliant, you didn't create a taxable event, everything was done by the book, so you're in good standing.
Yeah.
um, these are the type of things that you want to see before you create a trust, because you want to make sure that you're going to get some positive results that stand up in law, in the court of law. And you definitely want to make sure that have somebody who knows the numbers behind it, because those two sides, you being sued and then the IRS coming after you, are two totally different things.
Yeah. So I know probably people are going to hear this, right? And probably one of the questions they may have to do a trust, like roughly what we talking about as far as money is concerned. Like how much, if I want to set up a trust
Depends on
today.
what you're trying to do.
Yeah, I'll tell you that for some of the people that and I'm just being just flat out, is in a lot of cases we're talking about maybe 30K, 15, depending on who it is. Only reason why I say 30 is the people that I work with, they actually go ahead and they handle um every part of moving assets into the trust, uh, the accounting, the bookkeeping,
Opening up bank
um,
accounts, all of that
opening bank
stuff.
account, EINs. I mean, they have a guy who actually worked at Wells Fargo for the past 15 years, strictly in their trust department. They have contacts that actually help trusts get credit. You know, like get credit to your trust. Get specific loans to the trust. So it depends on what the package you're on. I've seen some people, they're available, I think, for like 15K, depending on which who you go with. But then again, like I said, that back support, that support, that ongoing um peace of mind, and knowing, hey, I don't really have to worry, which is why I said it has to make sense.
Yeah.
um if you're if you're making 80 to 100K off of whatever your activities are, and it's not W-2 income, um I would say, yeah, you probably need to go ahead and get this trust set up, um for the tax benefits,
Yeah.
for the assets that you do purchase, because once you do purchase them in this specific type of trust I'm mentioning, if the trust buys it, we're not creating a taxable event. The trust sells it. We're not
Wow.
creating a taxable event. So for you guys that buy and sell real estate, um, yeah, that it doesn't create a taxable event. If you buy a house and then you sell it, as long as that money stays within the corpus of the trust, the house gets sold, the money goes to the trust bank account and doesn't get dispersed to the beneficiaries. Spendthrift, that part of it.
The best thing that I ever did with wholesaling real estate was get a spendthrift.
Hmm.
The best thing. Now, I want to bring this up because I'm not sure if it comes up in the conversation here or if it's going to be a question. But tell us what your IRS enrolled agents tell you about backdating.
They're real specific.
They
On,
don't use that word. They'll tell you don't use that word.
yeah, yeah. I That's why I go and I say, like, when you're dealing with people, when you're talking about, getting this trust set up, like, you really want to make sure you're dealing with the right type of CPAs and accountants, because the tax code itself is like 4,000 pages. It's like 4,000. Most of the CPAs that we come in contact with only deal with a couple hundred pages that only deal with compliance. They don't deal with tax strategy. Most of the tax strategies where you find the enrolled agents, and then they'll go into cost segregation, depreciation strategies. But then when you get to the next level, the level that, that's why I'm blessed to be down here in Texas from Ohio, because I got connected with some people with some old money. They're dealing with agriculture and some other things. When you get exposed to that, now they're starting to deal with land trust, oil trust. This is really nothing but a complex, irrevocable spendthrift trust. But this is where the next level of that ownership is, because yeah, I want to make sure that we have a set standard, or set of rules. This is what my family is going to abide by. This is what my organization is going to abide by when I'm gone. I put it like this: have any of y'all seen what's that show? Power? Any of
I
y'all ever
seen a
watched Power?
couple episodes.
For anybody that watched Power, it's a funny, it's crazy. In the season
Yeah,
after Ghost died,
he
you
killed
know,
him.
you
Right.
after his son killed him, right? His son wanted to
Yeah,
get the money, but Ghost had that trust set up, so
that's
he
right.
couldn't. So the son couldn't get the money. He had to graduate from college first. He had it set up to where he had a letter written if the son went to jail, and had the letter given to, in the event that everybody else went to jail or something else happened. The little girl, the provision was in there that the little girl was going to go into foster care, and her name was going to be changed to protect her from this is something this is the type of thinking that you need to really be on.
You on
you
that
know
level.
you need to be
Period,
thinking
right?
about your future. You need to be prioritizing your next moves. Brother Jason here is definitely somebody who, he mentioned he does, mentorship. It's somebody who I definitely say you all need to speak with, because this is a brother who is on that level of is chess, not checkers. Is calculated. Is I have a strategy, and then I'm going to employ the tactics to meet my goal, and then is what's the next phase after that. That's the type of thinking you really need to be on if you want to take advantage of these tools that are available.
Listen, let me tell y'all something, man. If you've been an investor for some years, right, and you just not really getting the understanding of what this is all about, hey, don't feel bad, because every day this stuff is getting brighter and brighter to me. You know what I'm saying? Like, I'm learning so much. Like, I have a problem focusing on what I'm supposed to be doing, because I'm listening to this conversation, because it's stuff I've been missing. You know what I'm saying? So salute to y'all, man. Salute to y'all for sure, man.
Yeah.
Yeah, definitely. Jason definitely know a lot of stuff, man. He helped me a lot of things that he does, man. I'm picking it up every single day, bro.
Just
So
like entities,
yeah,
doesn't
absolutely.
matter how many trusts you can have.
A- And I'm gonna tell you, so shout out to, he hasn't said anything, brother Jarrell down here. You know, for what we basically, a lot of what I do would be considered private banking strategies,
Yeah.
using trust and life insurance, um, to really just create wealth and stability inside of that. On its own, outside of the other investments, real
That's,
estate.
I'm
But
about to talk about that now. Yeah.
brother Jarrell, he helps, the loan aspect of it, becoming a hard money lender. Once you reach a certain level of business acumen and success in the real estate industry, you know,
Yeah.
becoming that bank situation that we mentioned earlier, right? Why is it better to control rather than own? Well, because if I control, then I'm getting a steady stream of income. And if
Mhm.
the worst case scenario is that now I have to own it because this person defaulted on the loan, that that's the worst case. But this is the next level of it. This is making your
Yeah.
money work for you.
I definitely am able to take someone from grassroots thoughts of being able to turn their 401k into income again, more sturdy and reliable income. But the post ownership, bro, that's a gift that speaking to you is going to be the most important thing, because after closing after taking that property off, you become the owner of that property because of a default, how do you strategize that asset? How do you protect that asset and moving forward,
yeah.
and not be taxed if that or tax less
Oh no, not be
less
taxed.
heavily, or not be taxed
Not
at
be
all,
taxed. Not
Not be
no
taxed at
capital
all.
gains tax.
Zero.
Zero
So I
capital
mean,
gains tax.
I'm sitting here wondering, like, all of the people that I've helped so far um, obtain the role of owning notes, take it a step further by getting them involved, getting them in contact with gentlemen like yourself, and teaching them how to elevate that, and protect themselves more
Oh
so. So,
yeah.
man, that's beautiful, man. I hope that everyone I speak to and I tell about this podcast check this video out, because and
Let me make it.
that's some heavy stuff right here.
I'm gonna
interview
make it a
with
bit sweeter. Let me make it just a bit sweeter. Even so, the income that comes from the loans, right?
Hmm.
In most cases, I don't know if your people usually have to pay K1 on those. If
Hmm.
it's on, if this is throughout the trust, right? If the trust is the one that loaned the money out, and the trust is getting the payments, the loan
Hmm.
payments, right? This doesn't create a taxable event. There's no tax. So we're talking about
Yeah,
I don't have to pay taxes on the income coming in because I didn't create a
man.
taxable event. And then if they default and now I have to sell the property, I don't have to pay taxes. I don't have to pay cap gain taxes on that because all of it stays within the
I have
corpus.
a private
check,
money lender. I have a private money lender that just got wired back his money 3 hours ago. He would have loved to know what you're talking about.
hook
You
it
Man,
got my
up.
number, bro.
man,
You got my
yeah, we
number.
got it. Yeah,
Yes, sir. So,
next thing's happening in the morning. He's in Hawaii time, so we may can catch him tonight. But
yeah.
man, that's heavy right there. Because I mean, it's not a penny saved is a penny earned.
But
Yeah.
Penny saved
I,
is a penny earned.
I did an interview with a guy right last week. I don't know if you guys got a chance to see it. He buy notes. His name is Cody Cox, man. Phenomenal, man. You know what that is?
Yeah,
Everybody said? But yeah, but
I've heard of him.
he's doing his thing, man. He's doing his thing. He reached out to me. Well, I reached out to him, and he was in Mexico. We got a chance to sit down for an hour and tell me his whole story, man. So I'm gonna definitely plug him in. I don't know if you guys can work together, but
He
why
buy
not? You know,
notes.
Definitely,
yeah,
You say he
everybody
buy
know.
notes?
Yes, sir.
yeah.
Oh man, we create notes all the time.
Exactly.
Uh,
Exactly.
that's
Yeah,
I need some people to
look.
buy some notes.
yeah, man.
This
So
country is
Yeah,
ran off of debt. If you're
yeah.
gonna you may as well get in where you fit in, and
Yes,
you're
Pretty
not
much.
finna be you're not finna be the person that changes the American capitalistic system on your own. So I'm not saying feed into the problem, people. I'm not saying that, but I'm
Right.
saying that rather than sitting around and complaining about, oh, these people making all this money and they doing this and they not paying taxes, instead of sitting around being upset about it, figure out how you can
play the game.
benefit from it.
Learn how to
How to
play
play
the game. You got to learn how to play the game, right?
Mm-hmm.
Oh, you trying to using some zingers today.
But I'm just saying,
yeah,
you got to learn how to play the game, right? You were
Now
just talking about, and he brought up taxes right now, right? People don't understand that there's a whole different tax code
for
that the
life
wealthy
insurance.
works off of that nobody ever talks about that we can get into. And that's where your trust lies.
That's
Okay.
where
And the code is written for everybody. The tax code wasn't just said, hey, we wrote this tax code for the poor and we're gonna write this tax code for the rich. They didn't do that. The tax code applies to anybody and everybody who is a US citizen or as is becoming a US citizen. They can use that. But we
Yeah,
never get
yeah.
past that because Jackson Hewitt, H&R Block, and these 1 month trainers that do your 1040 easy don't understand that other tax law.
yeah, yeah. That's true. But Johnny just got to talking about that. He got something that's coming out that's gonna help you with this right
Oh
here.
yeah,
You
yeah.
know what I'm
We
saying? So
we
tell him a little
definitely
bit about
go.
it.
So we have a system called Ultimate Banking. Um, where it combines the strategies of using these trusts, and we combine it with Jay's he got life insurance down there, but we combine it with the power of permanent life insurance, specifically index universal life policies. um I'm a fan of other type of policies. Whole life is cool, UL, VUL, they're all fine. But if you're gonna play it like one of the banks is too big to fail. Like we create, like I said, it's ultimate banking. We believe in, capital taking advantage of those upsides, but being protected from the downsides. Um, having that inside, because the first thing that needs to happen for a trust to be valid is another point, write this down, needs to be funded. And most cases, the first and easiest way to fund a trust is with the life insurance policy. When the trust owns the life insurance policy, you know, now we have a completely the trust has it has an asset. It's a tangible value. What's up?
Yeah, yeah, yeah.
Hold
I
on.
felt one was coming right there.
Listen,
Yeah. That's crazy, man. That's crazy.
look,
You dropping some
that just,
dimes, man.
that just busted my entire
Yeah.
skull back.
Wow.
So you telling me right now that I can take my life insurance policy and I can put that in the trust
Yeah, have the trust
to
on.
fund it?
We want to own the life insurance
Ah,
policy.
shit,
We
man.
want the trust.
Some
It's
things you
game
just
time,
don't
man.
even know.
Y'all ain't like this thing shit
Oh,
agreement yet?
wait till I tell you what people never tell you what you can do with the life insurance
I'm on the
policy,
damn
though.
thing and I want to like it.
Yeah.
Like,
Hey, like, share, and subscribe, guys.
Oh yeah,
This is
no doubt.
399, man. Like, share, subscribe.
Once,
Before
once
please,
before you
again,
before you
y'all know
bust
I'm
that
writing this
gem,
down.
yeah.
before you bust that gem real quick, I
What's
want
up? Go ahead.
everybody, if you wrote down what he said a few minutes ago when he said permanent, I want you should double underline permanent because there's a difference
Please.
between leasing a policy, that term crap that you're looking at, and owning the policy.
And let me be clear, term
That
is
life.
not
That
all
life.
bad.
It's
Term is
not.
good.
It's
Term
not.
is good for specific situations. If you got to take out a loan for, like, let's say you got a business loan or something like that, and you got, your own personal policy, and you don't want, that's going to your family, your kids or whatever, and you don't want that to be, your creditors for the whatever the loan is, then, hey, it makes sense to get a term policy. Mortgage protection, those are usually term policies. So in some cases, it makes sense. But here's the thing, if you know the exact date when you're going to die, which I don't know if anybody on here does, I don't, anybody,
Oh
Hope you
wow.
never do.
I hope you never, but here's the thing, if you know when you're gonna die, then term is the perfect. It's perfect for you because now you can specifically time it. But the
Yeah.
chances are, if you're a normal human being like the rest of us, you don't know when that's gonna happen and how it's gonna happen. So the best way to hedge against that risk is permanent policies, and because it's permanent, it has a feature called cash value. That
Yeah.
even though you hear cash value about, oh, get money, get money. Look, the primary reason for cash value is to offset the cost of insurance the older you get. This
Exactly.
policy is made for you to have when you're
Exactly.
old and dirty and dusty. So, the cash value is meant to raise the policy value so it offsets. Because here's the thing:
That's right.
if you're a life insurance company, it's the reason why you need to get insurance while you're younger, because the older you get, it's more
Yeah,
expensive
man.
because 1 + 1 = 2, and two is more than one, so you
Yeah.
have to be
Right.
you closer to death. All right, that's just how they look at it. The underwriters, they're looking at, okay, yeah, well, statistically speaking,
You're almost out of here.
you're almost out of there.
Yeah. So let me give you guys this here real quick. So we talk about taxes, right? Who pay the most taxes, right?
Oh,
Everybody know this already. So out of this quandary, right? Who pays the most taxes, man? Percentage wise.
I'm
Income.
gonna be honest.
Well, in
It's
this one,
split, but
everybody does.
everybody. I'm gonna be honest. Everybody on this list, everybody on here's the thing. I like to look at it as the three teams, because this is perfect, but then at the same time, this can all be summed into three types of people. And there's one that's a group that's even missing. There are consumers, which are people who you consider your employees, basically everybody. Everybody buys stuff, everybody consumes stuff. Then there are producers, which are going to be your investors and your business owners, and even your self-employed people. But for the most part, these producers are going to be providing other opportunities. They leverage other people and
Yeah.
other people's time. The employees, self-employed, they leverage their own time. Then
Yeah.
we go into what I like to call the banking mindset, where I'm not leveraging any of this. I'm leveraging money.
Mhm.
Like the investor, yeah, may be leveraging money, but at the end of the day, debt's got to get paid before equity.
So the difference between like the employees and the employers, right, in this or investing in this situation, right?
They
Employees will
all
get
pay
their money
taxes.
off top though. Before they can get their money, they already got hit with all these taxes, right? But
But
as a
here's
business owner, you can actually reinvest a few times or do some different things or whatever before you have to pay, or you can kind of do some things to where you got to pay as much. You know what I'm saying? Some of the things you was talking about.
yeah, having access to those pre-tax dollars,
Yeah.
um, that's the it's one of the differences. Is how you're able to transform your situation. You got to transform your active income into passive income if you want to start receiving some tax breaks on it.
Here's one of the ways you can do that too, man. Invest in the Roth IRA. What do you guys think about that, man? Are you guys fans of Roth IRAs?
I
It
am,
depends. It depends
but
on how much
yeah,
money somebody has. Because if you're a high income earner, so like some of the clients that I deal with, they can't do anything with a Roth IRA. They make too much money. Um, they it's not necessarily an option. I do say that any situation that you can grow your money tax free, because there are only three ways you can: permanent life insurance, Roth IRAs, and municipal bonds. But yeah, definitely. If you're trying to put some money in a relatively safe, relatively, I speak relatively emphasis on it. Yeah,
I mean,
be careful with the municipality bonds too. Be careful with them
yeah.
because
yeah,
don't nobody ever talk about Chapter 9 bankruptcy, which gives
no,
the ability for municipalities to file bankruptcy.
yeah. You gotta be careful. Only deal with a trusted advisor. Trusted advisor. You need somebody who, they need all their securities, like they need to have been in the game for some time, because the bond market, especially the muni bond market, is completely different than other markets, even from my own learning and experience. And I am not the advisor, and that I do not have my securities license. I don't want them handcuffs on me. Uh,
Yeah. So what about a self-directed IRA, right? I mean, of course, you're gonna get hit tax putting your money in it, but if you do some different things with it and grow it, it can be tax free in that situation, right?
Once again, I use life insurance instead.
Okay.
Um, just for the simple fact that, in a lot of IRAs, you're still subject to market volatility. Love index products. I love index products just for that. Zero is your hero. You have that floor, so I'm not taking a loss. But I still get to participate in that upside. So, um, I'm not going to knock anybody from doing a Roth IRA, but at the same time, if you can, and you're in a position where you're healthy enough, you can, commit to funding an insurance policy, I would say do that, because you don't have contribution limits. You don't have early withdrawal penalties. You still get that tax-free growth. In the same sense, you're actually going to probably come out better. You're going to end up buying money. Um, and that's just a strategy we employ. I'm not knocking, once again, I
Yeah.
am not knocking the Roth IRA. It is a wonderful tool. Um, I just am such an advocate of permanent life insurance, because it does what you would want your 401k, your Roth IRA, these different types of retirement plans. You're putting money into them for a guaranteed amount of money, for you to be able to rest assured you're going to get paid later on down the line. Am I right?
Right.
Yeah.
What most people don't know, and most insurance agents don't know, is that a lot of companies have what's called lifetime income benefit riders, meaning that once again, we're going into contracts. This insurance policy is a contract. And if you use this rider, this clause, this basically could it states in so many words that if you continue to pay this money into this policy from this point to this point, and you live to be this age, then at this age you can start taking X amount of dollars in lifetime income.
Yeah.
You
Yeah.
will get this much money every year until you die. And the one thing I like to, show people is that, well, isn't that the whole reason you're putting money into the IRA? Isn't that the whole
Hmm.
reason you put money into the 401k, so you can guarantee you can have well, why not use a contract to your advantage?
Yeah.
Use
That's
the
true.
contract to your advantage to guarantee the income. And here's the beautiful part. For everybody that's listening, I would imagine you're doing something outside of just working a W-2 job. So I'm going to speak blessings and manifestation of blessings into everyone's life. You're going to be making more money next year than you're making this year. You want to be able to have the flexibility to, hey, well, I can't put any more money into this policy. I'm at these limits. You can start another one. There's no law that says you can't own multiple.
Yeah.
You can own insurable interest is real. Your kids, you own a business. Guess what? Keyman insurance is real.
Yeah.
Buy sell agreements are real. These are ways that you can create retirement income
Key
by killing
man,
two
you say
birds.
key man what?
Keyman and key person insurance. So
Key
if
person insurance.
if you have, let's say, like you got somebody on your team that's like a sales director, right? And you want to make sure that, yo, I want this person on my team for the long haul. You've invested a lot. This is a way that, we can structure. You can have an insurance policy that this person, if they commit to what they call a golden handcuffs plan, um, they'll commit to working with you, and in return, they'll get this insurance policy that can pay them X amount of dollars every year in tax-free retirement income, and still give their family this death benefit. And if structured
Oh wow.
properly, it's no money out of pocket for the employer if
Employee,
structured
yes.
properly. So, you get all of these benefits, but then you're able to give your people, you know, what was the equivalent of a pension back in the day.
Yeah.
But it's just a well-structured life insurance policy.
Man, listen, there's been a lot of jewels drop here for sure. This is one of them episodes you gotta listen to probably about 4 times. You know what I'm saying? About 4 good times, man. So wow, man. Wow. I think you got me stumped on this one, bro.
Yeah, the wholesaler. Yeah, Lenny
Hold
Rush. Yeah,
handcuff.
it's
Yeah, that's real,
golden
bro.
handcuffs. When you have key talent, right? When you have crucial, this is a part of, we often discuss this on the SBS podcast.
Wow.
When you have those key pieces, right? You want to, instead of worrying about all the negativity, what you need to get rid of. How do I, cultivate what's already working for me? So if you have somebody who's already invested in your business, why wouldn't you want to make the deal sweeter for them? Why wouldn't you want to incentivize working with you, and staying with you and focusing on the pot? Because, you know, two people working together is way better than one. If you can delegate tasks and divide and conquer.
Hmm.
Yeah.
Yeah, that's true. That's true. But man,
Yeah.
you guys exhausted all my questions, man. So, hey, everybody that's listening right now, you guys got questions? Now's your time, man. Hit the box, man. Tell us your questions, man. Let's get, we got a couple more minutes before we get off, man. You
Yeah.
guys have any questions for him?
I'm gonna throw one more thing out because it's something else that I don't think people know that you can do. Um, so there's a situation. Let's say if you want to earn 3% average on all the money that you spend, right? There's ways where you can actually flow money through a life insurance policy. Literally being meaning, we had a case study where there was a lady who she wanted to pay off her mortgage, and she saved $500 every month. So she literally, for a set number of years, would um she's going to put 2,500 in, and she's going to take a loan out for 2,000. She's literally going to flow money in and out. And literally, what happens is when you put your money inside of these policies, historically, you're going to get an average of, say, 7%. Um, and when you take the loan out, the loan is going to cost you roughly 4%. Some places right now it's like 3.5, but we would say roughly 4%. So if you put the money in and it's earning at 7, and then you take a loan out, and it's not the same dollar. This is in
Mhm.
coming, in separate accounts at the insurance company. But if you're using that basically almost that same dollar and it's only costing you 4%, but it's earning 7, you get that differential of 3% on average of every dollar that flows inside of that life insurance policy. So this is whether you're talking about bills. I never, one of the things when I talk to other investment advisors, they always try to steer their clients away from me, but it's like, no, I help your clients get money beforehand and get another asset. And if you can flow the money through the life insurance policy and then go invest in that property and then Jarrell loan that money out to whoever it is, and then invest it in whatever mutual fund or if you have something else going on, but it's a way to capitalize on it. And this is what the ultra wealthy people do. They find as many different ways to earn off of $1.
Yeah.
How many ways can $1 earn for me?
Yeah. I did that on accident with my 401k, man.
Yeah.
On accident. So when I was working my corporate job, I accidentally filled out the deal wrong, and I put my whole check in my 401k.
Oh,
I had money to live off of, so I decided to do that for that whole year. Right?
yeah.
And so after that year, I went ahead and I took the loan off of that money and just kept my check going into that 401k. And just took a loan off of it every year, paid all
Yeah.
my bills up for the
Arbitrage,
whole
man.
entire year. But while I'm paying myself back from my check, the interest of that then still goes back to me, which is in that 401k.
Okay, yeah.
So let me tell you what happens with the life insurance, right? So and it's the last thing because I don't want to overload nobody, but this is how you create disability insurance and a life insurance policy. So let's just say, instead of the 401k, like I'm putting it in my life insurance policy, right? I'm paying my bills, I'm just flowing it through. I'm putting the money in, taking the loan out, earning the interest differential within the account. At a certain point in time, let's say I can't work, right? Let's say I get injured or whatever ends up happening and I can't go and earn income anymore. We use, and it's different for different companies, but there's certain riders that are like a waiver of specified premium. So for what we do is based on arbitrage of taking that loan out of the policy. So if I can't work, but this stipulation, this rider in this insurance contract states that, okay, well, if I can't work, they'll pay my premium. And my entire monetary system was based off of me taking loans out of my insurance policy. Well, they just paid the premium. It's in the contract. They paid the premium. There's nothing that says I'm still taking the loan out. Disability insurance.
Wow.
Damn. So that replaces disability insurance by using that tactic if that comes up where you normally would use disability insurance.
That short-term disability that they offer you in the beginning.
Yeah.
That first day of work, right, where they give you some money and then take it all back. That's one of the things that they offer you, but you can get that another way.
What did Double X say? So many questions to ask. I'm sure we all would like to see another insightful session like this again. First time catching y'all live, but I'll be better prepared next time. Definitely, man.
Definitely. Thank you for tuning in. We appreciate that. Life
insurance policy again, your debt, intriguing concept that could be expanded on separate video. Yeah,
man. And we're
please like, share, subscribe, guys. Like, share, subscribe.
Could go on and on, man. This could go on and on.
I knew this was gonna be good, man. And first of all, I didn't know a whole lot about trusts. I'm just keeping 100, right? So I had to do my research. I'm like, okay, this is gonna be interesting. And so you guys, man, y'all knocked out the park like you always do. I really appreciate it. So I got tons of notes here, man. Spendthrift. I got tons of notes here, bro. I got a little page going on right here, so I'm gonna do a lot of research on this, bro. I'll be ready.
If everybody wants, I'll send it. Well, Jason, he got this. But if you want, I'll send it anyway.
I'll still take it, man. I can give it to somebody else. Put your contact information and your stuff on there.
Oh,
that way I can give it to. I can
I'm
give it to people.
I'm already some steps ahead of you, brother. It's on the last page.
Yeah,
My picture,
come on.
QR code, email, phone number.
Yeah,
Yeah, that's the one thing I always want to make sure. They say the best type of ability is availability. So,
Facts.
yeah.
uh,
My coaching and mentoring students, man. I mean, look, I can give it to them, brother.
Yeah,
You
man.
know,
sir,
they'll
Terry,
come. You
it's-
know,
I definitely.
they'll deal away from being able to work with you, bro.
absolutely. Terry Richards said he missed the show, man. Dang.
Dang, Terry.
Yeah, he missed, but the replay. It's all about the replay, man. So, man,
Sorry, he was busy selling them cars,
oh,
man.
yeah, that's what's going on. Ties
Yeah.
and cars over there. So,
That's
absolutely. But listen, man. So we right at that hour now, man. So hey, listen. So tomorrow, we kick off our mentorship, man. For anybody want to learn about wholesaling, definitely tune in. DM me, man. I'll send you guys the link. And this Saturday we have our REI meetup. This Saturday at 10 o'clock. So this month it came so fast, man. So like that happened last week, bro. So we got that going on. So you guys want a link to that? Definitely reach out to me. We're gonna teach you guys some. Oh, he say word, guys. so teach you guys a little bit about wholesaling, man, real estate investing. Of course, once you close that first deal, man, you go holler at leverage, man, so we can get this thing together.
oh yeah.
Go check out Lenny podcast, you know what I'm saying? Get with me and Jason with the REI meetup this Saturday. And definitely, you want to fix and flip, go holler at Jarrell. So we got the whole hookup
Hey,
right here for everybody, man. So
Jarrell will have you on that next level game. That's next level. That's
Yeah,
like I said, that's your money working for you. That's
yeah,
richest man in Babylon putting your gold coins to work for you. You know what I'm talking about?
yeah. And all
absolutely.
while you're creating and establishing dreams for other people also. So
Yeah.
Yeah,
it's a wonderful it's a wonderful blessing to be able to even loan money, because honestly, doing it the right way, you're providing
community.
that security for those investors that's in it, that's then going to turn around and take that knowledge and give it to someone that was just like someone just like them back in the day. So
Yep.
Yes,
I love
sir.
this game, man.
Man.
Hey Jay,
Yes, sir.
before we get off, man. So what we gonna discuss next week?
Man, you pick it. You pick it, bro. I'll ride with you.
I think we should do part two of this.
That's why I was going. That's the reason why I'm bringing that up. Let's do part two of this, but then
Okay.
let's also incorporate into that proper entity structure.
Okay.
Oh
You
yeah. Oh yeah.
gonna go
Cause
with double
because
X here?
yeah, we do that because cause yeah because
Right? Because then
it's
we
a
could talk about some Wyoming and Delaware and all of that good setup
Yeah,
and
Okay.
stuff like that, and
yeah,
then incorporate that with leverage.
because
Nevada.
And
I need to tie into that aspect of it because the people I work with they just for the most part they're completely against all statutory entities.
yeah,
But I do understand that when it comes to certain things, when it comes to like write-offs, or let's say like travel, depending on what your business is doing, you got trade lines, credit, business credit, things like that. Yeah, I want
yeah,
to
You
tap
can't
in
get that
on
with
that.
insurance. You
right.
can't get
But
that
your
with insurance
trust,
company.
Oh
see,
no, no, I'm a
your trust can set up that entity, and that's the reason why I was said we can bring that together on the next show.
Man, that's
I
gonna
have
be
one question. If I don't ask, it's going to be bugging me, and I
yes
can't
sir.
wait to speak to you offline to ask this. So you're saying that any business that generates income, you can be owned by a trust, and the money is and the money that the income that the business makes is untaxable unless it pays out to the trustee,
So no, it's the beneficiary.
the
But in the
beneficiary.
in the
Excuse me.
case of when in the case of let's say like, and it varies. It depends because let's say I have um a C corp or a S corp. In that
Mhm.
situation, you're probably going to do a strategy that involves leasing intellectual property or equipment from the trust to the business. So
Okay.
then you're going to be able to probably get around up to like a 70%, up to like a 70, 50 to 70% tax break off of that. Versus if I have like an LLC, right? And this really doesn't, I guess, really doesn't matter what state it's in. But if I have an LLC, and let's just say, um, I could still do that situation where I could lease the intellectual property and the equipment to the trust, but in addition, I could make the trust a limited partner to the LLC, and then I get a 90, like whatever that net income is, 90% of that can be moved to the trust. And
Oh,
now your tax bill is based on the
Listen,
remaining
bro.
10%.
man, what
This
the?
is deep right here, bro. This is deep. Man.
It
Okay.
hurts when you
Okay.
find you've been making money the wrong way.
All these years.
It hurts, bro. You be thinking like, okay, sure, I'm doing good.
See
Then
that
find
statement,
out,
the
what?
answering that question is the one reason why I said this needs to continue to
Yes,
next week.
sir. We definitely do
Yeah.
that. We definitely do that. Now, you guys went on the Small Business Stand Up podcast yesterday, man. We we talked some good stuff yesterday, man. We also had a chef on there yesterday as well.
Yeah, man. How did
Man,
the
let me see, bro.
catfish turn out, man?
Pull up the
Man,
picture.
it
It's on
was
there.
That boy had some honey hot catfish, man.
crazy,
Boy.
bro. Let me see if I get the picture, bro. I suppose I had to pull it up for it too, bro. He did his thing, bro. I only have the picture, man. Let me see. I think I got it.
It
Hold
was
on.
looking real tantalizing in that kitchen.
Yeah. Nah, I only got it up, bro. That's crazy. I definitely will have it the next time, man. I should have had this up for him.
Bro.
Yeah, but he did his thing, bro. He definitely did his thing. I sit back, I'm like, man, I almost got in my car and went and drove over to where he was at, bro, to go get me a plate, man.
I told him, I was like, bro, you just thought you in Grand Boy GP? Are you all
Yeah.
20, man? Hey,
Right.
Yeah.
hey, don't play with me, boy.
Well, at least we know, man. Whenever we got some, need somebody to come cook. We know the man already now, man.
Oh yeah.
Well, we still need to do that meetup, Jay. So we might be able to try to get him to come cater for us, bro.
Leverage the
Yeah.
one. He got the spot. Tell him about the bar, the cigar thing you was telling me about earlier. Leverage.
Oh yeah. So we got an event that we're gonna be doing on October 20th out here in Dallas. It's at the House of Cigar Factory. I gotta get the exact address, but it's on Midway in Dallas, Texas, near 635. And we'll be going over some of these same strategies and things that we were talking about today. In addition, Brother Jay, I want you to come out, and speak on some of the real estate aspects. We're gonna be tying it all in together. What does it look like if I have the trust, I have the life insurance policy, I have real estate? We have another guy, brother by the name of Rudy Frederico. He actually is a franchise specialist. So he actually helps individuals either go and start franchise, buy into franchises, or turn their existing business into a franchise. So is creating an ecosystem, what it all looks like on, just some plays on generating wealth. With the knowledge and hold on.
Yes, sir. Yes, sir.
Listen,
Yeah, he had crawfish in that thing. He had seafood. He had a shrimp. He had the sausage, and he had the honey fish. Bro, he did his thing yesterday, bro.
Oh,
He did his
that'd be
thing.
good right there.
Midway in Dallas or Addison.
I guess Addison. It's all Dallas County. I don't really be.
All right, put
I'm
it
from
like this:
Ohio.
on the south or the north side of Bell Line.
It's over by six, like right off of 635. So I guess it'd be almost considered Farmers Branch.
Okay, Farmers Branch.
And if you guys want to, book my guy, man, here you go, right here. Josh. He good. He cold
That's
stuff, man.
easy.
Yes, sir. Tell him, Jay. Tell him Small
right.
Business Stand Up sent you guys, man.
Oh yeah.
All right, guys. Any last words, man? Tell them what you guys got going on.
Nothing, man. Education is your passport to the future, for tomorrow belongs to the people who prepare for it today. Mr. Malcolm X. That's what we're doing here, buddy.
Yes,
Dope,
sir.
dope. Let me,
Just
go ahead. Anybody?
Closing life and trying to make sure that closing loans and making sure that everyone in my circle is good, man. Bless up to all you guys, and I love this positive energy and all the knowledge that we gain in here, man, together.
Who you work with though, Jarrell? What kind of investors you work with?
I'm actually AKA the investors lender. So I work with generally investors only. All my loans that I originate are non-owner occupied. So you must be either a business or someone who's not living in that residence as a primary. So yeah, man, just if anyone has any questions about any hard money loans, we're lending up to 90% of the purchase, 100% of the rehab costs on those refis, 30-year mortgages, 80% loan to value. It's got some very, very low rates. Just give me a call, man. Give me a call. We can get some things going.
All 50 states?
About 45 of them.
45 of them.
Yeah, about 45 of them. So
I
I can.
guess New York is on that list. Is New
No,
York
I live in New York.
You doing? Oh man, that
I
usually
live in New York.
you run into
Just-
all type of problems in New York.
I do tend to kind of steer away from New York though, because they have a lot. Their whole real estate game is different than the whole country. It's just separate.
Yeah.
But nonetheless, yeah, Wyoming, Idaho, just those Midwest mule countries. Don't let.
You say Michigan?
Yeah, Michigan.
Yes,
Michigan,
sir.
all through Michigan. Yeah, definitely.
Ohio.
It's not going to be probably a state that you're going to say that's worth lending in, and I don't lend in. No one's going to say North Dakota.
No,
That's on the list.
North Dakota's on the list?
No, off the list.
Okay, I was gonna say, man, come on,
That's
man, ain't
on the
nothing out
list
there.
of on the list of no.
Yeah, ain't nothing out there, man. I did insurance out of North Dakota. There ain't nothing out there, man.
What about you, Lenny? I don't think he hears, man. I think he said sound.
His mic went out.
Yeah.
Oh, he's trying to fix it.
His mic stopped working. Okay. All right. What about you, Leverage? Anything else? You know, you talked about the cigar thing. You guys.
Yeah, we got that going on, and you know, just here to educate and really just help build up, you know, our own economies. I love this environment because you know representation means so much, and it gets downplayed a lot, especially when it's brothers on here. You know, it gets downplayed whenever a group of us get together, but especially when it's something that's positive. Anytime I can just be here and spread value, cause some light bulbs to go off, whatever the case may be.
That's all it is.
That's what I'm here for. If anybody wants to reach out to me, my website is up at www.enneadinfinite. That's ENNEAD INFINITE enneadinfinite.com. You can go schedule a discovery call. We can sit down. You can, I'll ask you some questions. We'll figure out what your situation is and how we can help. That's what we're here for.
If you didn't get that, shoot me a text, man. I'll send you his number.
Yeah.
By pigeon, by mail, whatever, text, whatever it takes, man. I'm gonna get you to this man.
You got some smoke signals. You got a bat signal or something, man.
Absolutely. Hey, again, man, appreciate you guys getting on, man. Your time, man, the information you guys spent, man. Hey, everybody that's gonna listen to this, maybe a year, 2 years down the line, bro, gonna really appreciate it. So, hey, man, salute to you guys, man.
Yeah,
salute to you guys. Go kill the rest of the week, bro. All right.
Yes, sir.
See you next week.
All right. All right, Pete.
Later.
Thanks.